be designed to meet your risk appetite as well as the personality. So before we go into that, we will just look at two important news that has come today, and also the important data event for this particular week. So right now we have seen we got a news that the Indian economy has grown by 8.7% in the last fiscal and 4.1% in Q4. So there has been a soft patch in Q4 mainly because of some COVID restrictions during the January-February period, the Ukraine war, higher input costs. All these things have and also higher base effect in the previous year. So all these things have resulted in a softer growth in Q4, and the overall economy grew by 8.7% as against 6.6% in last fiscal. So this was a contraction. This was a down 6.6%. Yeah, it's an upward of 8.7%. This year, general expectation, the economy will grow by 7.5%. So these are the news that we just now received, and also GST compensation has been fully released to all states, which means that the state government, respective state governments, will not have a fund crunch if they are looking towards capex. That is, but if they are going to use it for other purposes, probably it could be dicey. But if they are going to use for capital formation, then in that case the GST compensation is going to be a good news. Then we are looking at the important US data, that is US ISM data. This is a very important one, as well as the employment data. So this is to be released on Friday. So these are important data sets which will give further clues towards how the biggest economy of the world is heading towards. That is, if there is softness in ISM data and employment data, then probably the inflation also will come down in future. Okay, but at the same time, the economy is entering into a soft patch, which will have definitely ramifications worldwide. So this is the important data set for in the coming days. Now we will look at the overall situation of the market right now. It went up to 16,650 plus, and last week we had highlighted, and a couple of days before that also we had highlighted that Nifty has formed a bottom around 15,700, and we argued that in case if 16,400 is broken, then the option data implies a probable move even up to 16,800 by this week, or so the rally could stretch itself to that extent. So we had called for a buy position. So right now we are at there was a slight softness towards the close today, but the strong support will emerge at 16,400 because that is the place where Nifty hesitated for a considerable period. So only if it starts going below 16,400, we may have to slightly reverse our opinion about the state of the market. So if this holds, then we could probably still touch 16,850 shortly. So then we have to see how the global market performs. It will also depends on what, because S&P also has rallied significantly from its fall of 20% from the peak. So what happens globally will also dictate the overall situation of the market. But what we understand right now from the interaction is 16,600 is a very, very fair level. That is what they call as the excess valuation in Nifty has been removed at 16,600 levels. So the trailing PE also has, ensures that 16,700 investment below 16,600 will generally be profitable over a period of time. So the froth has been removed in above the 16,600 levels, and we could probably any fall is likely to be a good investment level, and the market could be bought anywhere between 15.4, 15.7. Could be a bottom in case if there are further falls. So I think we should be looking towards more of an investment angle. Once if there is a further correction downward, for a good return in a future period. Okay, not for an immediate investment. Okay, so now we'll turn towards the topic of the day, which is the system. Now there are different types. If you're an investor, you can pursue a type of track. If you are a trader, you need to pursue a different type of track, because an investor doesn't look towards I think not much of a stop losses and other things. generally, would like to look at the overall situation and look at the valuations, look at how certain funds are performing, what strategy that you need to adopt to gain over a period of time. So these are all will be playing in the minds of an investor. So the investor, probably if he's going for a stock selection or whether he goes for a mutual fund investment, I think their analysis will be different. And also the investor also it also depends on the money capability, right? So because they can't spread themselves too much in different types of stocks and also different categories of assets, all those things. So I think all those things will be there. So the investor category itself is a very big category, because it could be a starting investor to a very, very sophisticated big fund investor. So so we have to think about where we position ourselves. So for the initial startup investor who is investing in equity, or probably has gained some knowledge and time in invested time in the equity markets, I think the mutual fund route, picking up a diversified fund, picking up a multi-cap fund, all those things, and also probably looking towards an SIP type of investment in a crisis situation type. And then once the market falls, then go for a lump sum investment along with SIP. So these are all the selection as well as the strategy. So that is for an investor. And also the investor should normally, look towards something on an average getting 14 to 15% return per annum. So that's the normal expectation of the investor. Probably, if he gets slightly excess, he will definitely book the profit. And if it is going to have a much greater fall, he will be looking towards investing in the markets. So that is for the investor. Now, in the case of trading, trading, why should you get into trading compared to investment? So that is the first thing that you should answer. Why am I getting into trading? Okay, I don't think we should give the answer that it is for fun or it is because I would like to speculate, that gives me a kick. I don't think so. Those are proper answers, because the trading is to build up something which is extra than what the investment can get. Because if you are an investor, you are looking at 14-15% per annum. So can we get something more? So the question is that what is the return that you can get on the same type of investment that you will put for investing? That is very important, right? So if you are getting 14-15% there, so what is it that you will get in trading? This is what is the thing. Suppose if I tell you that instead of investment, in trading I can give you 18%. There is no point in coming for trading, right? There is no point in coming for trading. You will as well say that 3-4% leave it, chodo, I will be then in the investment area itself. So why does trading attract so many people? It is because the expectation is that you will get many times, multiple times of a normal investor. That is the reason why they come into trading. Okay, so that is one attraction for trading. But then is that so easy that people are making money? One is that whether are we making money? Okay, that is return. And second, are we doing in a sustainable manner? Third thing is, does it affect our emotions? So these are very important answers besides the capital. Okay, so whether are we making money which is slightly more, not slightly more, many times more than the normal investment as a return of investment, I'm saying, whether that thing can we make it in a sustainable manner, because it's not speaking about a few days of trading where probably by default you might have made some money. So whether are we in a position to earn in a sustainable manner? Are we able to keep our emotions under control besides capital? Okay. Now, if we have a proper answer in a particular system doing this, then in that case, that is a system which probably can fit your personality. Because besides all these things, you will be analyzing your own approach to the market. That is, approach in terms of your skill, your time, right? So your skill, your time that you can give, and the capital that you have. Okay, so capital per se itself is not the only factor. Okay, there are many people who have the capital, but question is whether they have the risk capability. Okay, whether they have the risk capability, because just because I have a capital, I cannot say that I have a capital, so please earn me that much of money, because if you say that whether now are you able to willing to take that much of a risk. Suppose if I got 10 crores and you tell me that no, please earn me 3 crores. Okay. Now doing the part of the trading, let us say there is at least even doing the process of earning, let us say there is a drawdown of 1 crore in that. Is it acceptable? So I have a capital, I want the return, but I don't want a drawdown, okay, that much. So that means you are not in a position to withstand that much of a drawdown. So in that case, capital alone is not that important. It is a question of how much risk and drawdowns that you are willing to accept. That is very important, okay. So then the skill that we have, okay, the skill means because how do we trade? What is the basis for trading? If I take Nifty, whether I should go long or short in position, whether today open, whether I should go long or short. So these are whether you are doing intraday or position, whatever it is. So question is that how much what is the skill that you have developed in getting on board as far as a particular strategy is concerned. Then the time that you are willing to, because can you be glued to the market itself? Can you do some other work and allow whatever that you wanted to be done and get a result? Is that possible? So you have to explore that. Okay, so the skill, the time, and the capital. Okay, now emotions, very important, because you can't, if you make money, but if you spoil your health, it's of no use. That system is of no use, right? So how are we able to know? So the question is, you should allow the system should help you to get detached from the results, but it gives the results. So that is most important. That is, you cannot be looking at keep on blaming something other for failures and other things. Any system will have its own failure and also will have its own success. So you have to withstand all those things at least for a couple of months, okay, to see whether that particular system gives you a good, not only a good return, but helps you to be detached from the results of the system. You see, there's a difference between a result and detachment from the result. So when you say detached from the result, that you don't, okay, whatever comes, I know it will come because I'm not interfering with a well-proven method of working. So it will come. So why bother about a day-to-day thing? So let's look at it over a period of time. Let us review this of 1 month, 2 months, and 3 months, rather than looking at what happened today morning, afternoon. So if you get into that, then the emotions will weigh down on you. So that is the important aspect. Then sustainable. So that means there will be periods of ups and downs. So you should be in a position to sustain all those things and still be there for a longer period of time in order to enjoy the fruits of the particular system and trading aspects. So how sustainable it is. Then what is the money? What is the component of money that is being made after the cost? Okay. The reason I'm saying this is that suppose let us say I have a Nifty thing, and say Nifty sometime back it was say 10,000 2-3 years back. Okay, 3 years back or so. Now that has become 16,500, right? So the gain here is 6,500, right, in Nifty. Now, if you have just bought and held Nifty, you would have got this, right? Now, let us say you have any particular system, and that particular system gives you the same result of 6,500 over a period of same period, but instead of just holding it, let us say you might have had, even in a year, 5 transactions. So maybe you would have had some 25 transactions or so during this particular period. I'm keeping it minimal over this 3 years or so, and you got this particular result. Then in that case, why will you do that, right? Why will you do that? So you need something. So that means the trading has not given you anything more than the investment, right? But you have got more transactions, so more cost of transactions and more monitoring. Okay. So at least there must be a fruitful thing that doing, if you have done this 25 transaction, instead of 6,500 rupees earning, I should have earned something like 15,000. Right, at least double the amount, which will justify. Okay, I'm not just for indication I've given that. So some X factor of the normal investment of buy and hold situation. Okay, if that be the case, then you will be happy to do that rather than doing too many transactions and getting the same result. So now we come to the very important portion. Now we have discussed all these things. So now, so that means these things will, when you try to find an answer to this, it will lead you to a solution. That is not a solution in terms of what type of indicators that you should use. But first of all, before going into that, what the time frame that you need to select. Say, let us say, what is the instrument? Okay, then what is the time frame that you need to do in the trading, and then only come the what type of indicator system or whatever it is that you are going to use, this simple, complicated, whatever it is. Okay, so these things, the answer to all the points that we just mentioned should lead you to instrument, the time frame, the type of indicator and systems. Okay, now let us say and also the costs which are involved. So based on this, let me say that the time frame, when we talk about the time frame, we look at, let us say, we can talk from monthly, we can talk weekly, we can talk daily, we can talk 1 hour, we can talk about 30 minutes, okay, 15 minutes, 5 minutes. So anything is possible, right? Anything is possible. So in what type of indicator, what type of system that you're going to use in any of these time frames, which is going to give a result which is definitely X times more than the normal investment. That is the first thing. Second aspect is, what is the cost which is involved? Okay, the cost of transactions that are involved over a period of time, and what is going to be the net result. Then third is, how easy, how difficult it is to implement any particular system. What is it that I have to use to implement that? Let me say you arrived at one particular system, but that system is difficult to implement for you. Then it's not possible for you to do that, right? So now when I say that to implement a system, let us say during this process I have given you a system which gives you, instead of 6,500 points in Nifty over that particular period of time, an investor who got it, I'm giving you 15,000 or 20,000, which is 2 times or 3 times. Let us say there is one indicator system which gives you that over a period of time. But let us say in that particular period, every day it gives you 2 trades. Every day it gives you 2 trades. That is, 2 trades are closed. Buy, sell, buy, sell. Let's say if it happens. Sometimes it may carry it for positional overnight also. So is that possible for you to implement it? Okay, so one, in terms of the number of trades per day. Okay, and second thing is, while implementing it, when the system tells you that no, you implement Nifty now long at 16,410, are you able to do it at 16,410? Okay, no, if it's 16,410 I catch it at 16,450. Okay, then what happens is, doing these type of buy sell slippages that happen, it will reduce the total effectiveness of the system. So slippages also have to be compressed to a very, very acceptable slippage. One. Second thing is our own execution capability in terms of the number of trades that it gives. Suppose if I tell you one trade once in 2 days or one trade in a week, probably it will be easier for it to implement, because probably the slippages can be taken care of in a bigger system, of a bigger time frame systems, and the time that you require to do that is acceptable to you, because you don't need to spend too much of time. And third thing is that the order system, that is how you execute it, that is, once a system shows that you should be in a position to buy, are you punching it and doing it here, or are you calling the dealer and doing it? So what is the time loss and what is the price loss? So these things, and also what is the transaction cost that you are going to incur in these transactions. These things also will decide whether that particular system is acceptable. But overall time frame, that from our own analysis of whatever that has happened, anybody who is generally trading, okay, should have to be successful in the present context, in the present situation, may have to look towards more automated type of trading. Automated, because by the time you see, sometimes you see the market opening gap down or gap up, but after that, if you see, within 5 minutes it just reverses. It just reverses 5 minutes. So somebody is buying exactly at the point where it should be bought, and that is why that big reversal takes place. Similarly happens as far as selling is concerned. So that means some sort of an automated basket order is going through, or algorithmic trading is going through. So some sort of systematic or system or programmed trading is taking place, which which gives you that particular result when you tested it, but you are not in a position to do it in a sitting before the computer and doing it. Then in that case you need to find a mechanism which will give you, which will implement that particular back tested system which showed you that much of profit, whether you are able to do it on your own or whether you need to rely on an external source, which could be an automated trading, to do that. So that is very important. So that means if you want a result which you have seen through a back tested method for a syndicated system that you adopted, then in that case you should also look at your execution capabilities and what execution system or method will give you the result is what you have to go through. Now any other particular system, let us say previously they used to know, let us say trade on a daily basis, and let us say one of the robust and effective trading you can probably call as the breakouts. Breakouts we have seen higher bottoms, higher tops. So these are so this bottom, okay. So here let us say this is a bottom, right? So on this day, next day the open was here, okay, open was 16,044. Now when you have a system developed like this, there is a higher bottom. So let us say you capture that when this high is broken, 16,000. This high is 15,984. So now here it breaks. That 15,984 is broken here. So the open is 16,043, right? So 16,043 it will show as if the system will show that 16,043 it has been bought. Are you in a position to buy it? That is what I am saying as the execution capability. Now 16,043 it will show, the back-tested system will show that it was bought at 16,043. Are you in a position to do at 16,043? If you are not in a position to do at 16,043 because it was open, one day I may not be able to be there to do that, or probably even by the time I see it, I punch it, it will be different. Then in that case you need to explore what is called an automated system. Now what is happening, I tell you, if you are going to trade and get a result which is the objective of trading is to get something higher than much higher than the investment, then in that case you need to look towards smaller time frame. Smaller time frame means if in a daily situation it is like this, then in that case if you do this particular system on a daily basis system, net result, my guess is it will be something which is very similar to what the Nifty buy and hold has given. Or you do a breakout in a daily chart, or you do a pivot point breakout. Let us say this is the pivot point breakout, right? So here it was, and let us say this place a pivot point breakout. Now if you do a pivot point breakout over a period of time, even on a daily chart, your result is likely to be lower than a buy and hold. And also the number of trades that you are going to make profit could be maximum 50%. So this is what will happen. So we may think that I'm very smart, so on a daily basis I do this the daily pivot high low point breakout. Now I'm just on the system in doing it. If you backtest it, you will not get a result which is equal to even the buy and hold. You may even underperform the buy and hold. Okay, and then plus in a system itself, but then after that your own ability to execute it, that will also determine. So based on these things you cannot go with this. So that means what happens? Then you have to come to a slightly lower time frame in order to get the result which you probably would have got at the buy and hold. So that means you have to come down from a daily chart right to 1 hour chart. Okay, so in a 1 hour chart you do the same pivot point breakout higher now, your result can be definitely more than what probably it is happening on a daily basis. So from the 1 hour chart, in case you want to even slightly better the 1 hour chart, you may have to probably look at a 15-minute chart. I'm just telling you all these things, whether you have a system or not. I'm only giving the overall guidelines of how things will work out. So then you need a particular, let us say you are taken one system which is the pivot breakout system. So the pivot breakout system in an 1 hour will give you a result which can be better than the daily. Okay, the 15 minutes pivot breakout will give you something, even a result which is better than 1 hour, which means the overall result in a 15-minute system will be good. But what can happen is, if you have done in the pivot point breakout in a daily thing, probably let us say doing the entire span of its nifty thing, okay, you might have got some 250 trades or 300 trades, whatever it is. Okay, every month you might have got some two trades or so. So 25 trades, so 2000 to right now, probably you might have got some 600 or 1000 trades, whatever it is, okay, on a daily basis. So if you do on an hourly basis, number of trades is going to be more than what probably you'll do it on a daily basis, right? Because there will be more hourly pivot point breakouts. For example, let's say now I'm going to the 1 hour chart. So in 1 hour chart, now we are what we are looking is now there is a say here it was the 1 hour chart has been broken, right? So this place. Now if you see, this is 1 hour chart, and today it just happened that there is so much of sideways motion, and now this particular pivot point, let us say, it is broken. Okay, but whereas in the daily pivot it is far off. Now we have identified the pivot something here only, right? This is the pivot in a daily basis. But whereas in an hourly chart, so that means, assuming the market is going to fall back somewhere to this particular level, you would have made an exit here itself. Okay, so that will give you overall higher return. So now on a daily chart, if you look at it, we are on the downward trend. Okay, because it's a pivot point breakout, so pivot reversal strategy, what we call. So the pivot reversal or pivot breakout point would have given you a sell at this place. Okay, now that means you are now onboarding yourself a little earlier. If the market is to fall tomorrow, you are onboarding yourself slightly on the higher level itself. Now let's say if you go to 15 minutes chart. So 15 minutes chart also would have made you get down here itself, right? Would have told you to get out of this place at this level itself, right? So the 15 minute chart also would have removed you almost this time. It has removed you a little early, okay? But whereas here, if you know here would have removed, okay, then probably would have gone long here. Then again it has been removed here, something like that. Could have happened. Okay, so now the 15 minute chart over a period of time will onboard you in a long or short position even before 1 hour. Okay, but so this is the advantage of shorter time frame. But what is the disadvantage of a shorter time? Disadvantage is too many trades and whipsaws. See, now you see this is the 15 minute chart. Okay, just look at the daily chart. It's much cleaner, right? Now 1 hour chart. 1 hour chart less cleaner. 15 minute chart. You can see after this particular big move which happened somewhere here, let us say after this one which broke out over 16,280. Now there was a gap trade, so which gave results. Now after this, if you see there are more whipsaws. See, it fell down, then before it could recognize, then today it just reversed, went up, then situation is not that good, right, as far as the whipsaws are concerned. So the 15-minute chart is producing a lot of more trades and whipsaws compared to the hourly chart. So that is a disadvantage. So the lower time frame that you go can give more profits, okay, over a period of time, but will also produce whipsaws. So then what happens in that particular case? You will have many trades. So in a shorter time frame, you will have more trades. Okay, more trades. That means more cost. So net of this we have to see then trades and minus cost. Then third thing is execution capability. So suppose I have told you that today on an average 2 trades per day will be executed. Okay, 2 trades will get triggered. Then do we have the mechanism to do that? Do we have the supporting mechanism to do that? So That is what we need to look at. That is what we need to look at, because today if you see this is the uh, this is the 915 trade, and after that it went up like this. So others players also it started to move up. So whether whether we could have got it a little higher at this level, whether we have one trade here, then another trade we could close it here itself and then probably go short. So at least you would have got two trades on a pivot reversal strategy in a 15-minute chart. So are we in a position to do that? So even if we keep seeing the chart every time and taking a trade, by the time you punch it or probably you post the order, you give it, chances that it can have its own slippage, it's a great possibility. So these things also will have to be kept in mind. So the shorter time frame's disadvantage is the whipsaws and the number of trades. Okay. So even if you have a system in automated system, it can produce slippages. It can also produce more cost for you because the number of trades will be more. So the advantages and disadvantages of a bigger time frame or a shorter time frame you have to see. Third important place, in any trend following system that you take, in any trend following system, you will have something like a success ratio will be only something like 40% or 50%. So normally a lot of traders look towards how many percentage of winning trades you have. Okay, so they look at the system only in terms of whether it can give you 70% or 80%, rather than and they say the system is good if it gives more than 65%. This is all this is not the thing. What is very important is you may have only 40 to 50%. Let us say 40 to 50% is a very reasonable thing as far as trading is concerned. But the remaining 50% which produces a loss should be lower than the 50% of the trades which makes the profit. So the profit ratio should be much more than what the loss is. Suppose let us say I'm getting the profit ratio 1:2. So the profit ratio I'm getting 2. Then in case you do 50 trades, okay, 50 into 200, then okay, 50 into 150, then I still make a profit of 50 rupees, right? This is more important than anything else. So what is the profit factor that you get is a very important part. Whereas in any trend following system, generally the winning trades will be as a percentage will be lower. So you should not bother about what is important is whether the system allows you to run the trade for a considerable period of time. Whether the system allows you to run the trade for a considerable period of time. Okay, whenever there's a profit, you are in the position to get the profit as much as you want. Okay, but whenever there is a chance of a loss coming, it should cut off fast. So this is the basis on which you should look at the system rather than only looking at the number of winning trades. So this is another factor that you have to consider while building it in the system. So very important is the system should also allow the profits to run. It should have number of trades which is compatible with your risk personality. Third is that if you feel that you're getting a higher return in a shorter time frame, notwithstanding the whipsaws and the number of trades it does, because even after all those things you're getting a much higher return than a buy and hold or a 1 hour time frame or a daily time frame strategy, that in that case what is the execution capability and what is the system through which you will do all these things in order to generate what is shown as if that system has produced a result. These are very important things for a trader to enter, because today we are not talking about people who have just entered, because those who have just entered, first of all, should look at of course, if for investment they should look at mutual fund also. Then they should look towards some sort of a position trading, because they have to get adjusted to that. They are not going for big results, right? Just enter out, where to buy, where to sell. All those things, developing some way of doing things and getting into basics of a trend following system, and then seeing how their emotion can be controlled and not get carried away also by some profits being made. So all these things are a testing place for those who are just entering it. But for those who have already been in this for some years, will definitely know this is not a place to rejoice, this is not a place to feel sad. I think question is that how consistent you are in implementing your thought process, which has sometimes proved correct. but which sometimes has also failed, which is part or parcel of a trading system. Only thing is that whether you are able to allow the profits to run, whether you are able to keep your emotions under control, and whether you are allowing the system to systems to work without your interference, and also the type of automated system that you are going to go, or whether you are going to put in your own thing which can give you the result of a back tested system. So these are very important essential ingredients of any trading system. Indicators, of course, you can have anything. Now, no indicator system, you can have many systems. Like no, then comes the indicator system, because now you're getting into some system. So you need something like now what we told about the pivot. Pivot reversal strategy is one. This is one. Super trend is one, right? Super trend system is one. Then you have the moving average system. Then you have the MACD. Okay, so in this itself you may have different moving averages, crossovers, all those things are there. Super trend, you may have different factors which could be 10-2, it could be 10-3, so you may be testing all those things. MACD. Then the pivot reversal, here the pivot is what pivot? That is it one bar to the right, one bar to the left, or probably you're looking at 2 bars on the right, 2 bars to the left to define a pivot. So that also again you have to test it. So here the pivot reversal, of what time frame you're going to look at it. So all here, what time frame? What time frame? Okay. What time frame? Okay. So these all very important, because, and also you have to test it over a period of over at least 1 year, 2 years, 3 years, better even for 10 years or so. Because there are some simple systems which can give you a result. Okay. But the question is that suppose, let us say, you don't want that much of whipsaw. Okay, you want number of trades to be less. You want a profit which is something very similar to the normal Nifty or something like that. Then, but in case if there is a reversal, you have to accept that. Then there are different ways. One easy way also, but you have to test it. That is, suppose let us say if the market 5% or 6% from the top to 5.5%. So now if the market rallies 4% from the bottom, okay, then in that case you go long. Okay, then you reverse the trade, liquidate the trade and reverse the trade if it starts falling below 4%. So the number of trades would have been less. So for example, I'm just giving an illustration. You have to back test it or see the results for yourself. Now let me say I'm going to the daily chart here. So this is 15,735, and if you put a 4%, 15,000 so 750 into 1.04, 16,380 or 16,400. So anything above 16,400 you can keep, either I've taken from the low, you can take from the close, whatever it is. So anything above 16,400, it's a long, that's all. Now it had gone up to 16,695, right? So 16,695 into 0.96, 16,027. So as long as it doesn't go much below this level, 16,027 or 30 levels, you can say that you will be still on the long side. So this is a 4% strategy, and if you look at it, many times the 4% would see here from 18,114, 4% is 720 points, so something below 17,300. Now this this place, if you see 16,824 to 17,414, there's also something less than 4%. So what happened? Fall below 17,300. This day only it would have taken at 17,183 or so. So 17,183, and you would have come out of this place at 16,400. So 780 points profit. Now you are going on the long side. So let us see. So whether this is rather a little simple system, okay, but whether that simple system has produced what result it has produced over a period of time. So this is something which you have to look at it. So here you will have only very less number of trades, very less number of trades. See, in this case, from here to this place, there was only one short, and that was closed here on long. So the entire 1.5 2 months you would have had only one trade, right? One trade or two trades only you would have had. So very reasonable chance of profits. So you can look at that way also. So you can put it in a system where. So here, whether you have to see that 4% what result it has given over a period of time. what result it has given over a period of time. But there, question is, what is the capital? Then of course you are going to now, we have already talked about the shrewdness in the capital. That is, now are you going to employ the same amount which you will employ in the cash market, or you will go for a leveraged futures type, or you will go for an option trading. You will go for an option trading. Okay. In the case of an option premium, you will be much lower than the even deep in the money option will have lower outlay than the futures thing. So in that case, the points that you get here can give you many-fold returns than normal cash market. So you can go even for the simple system if you are rationalizing the capital. So that is another thing that we have to see. Okay, so let us say the system has produced for an investment of 1 lakh. Let us say the system has produced a result. Normal Nifty has grown by say 11-12% over a period of time. And in the futures, then that means you have to have something like 2 or 3 times more, because adjusted for the premiums that you pay and other things. So probably and also for the MTMs and other things. So maybe over 2-3%. You can 2 times or 2.5 times. You can say 12% could be something like a 25-30% in the future. So if you are leveraged it like that. In the case of an option, since you're going to put much lower, that is instead of lakh and 25 there, you may put only 40,000 also, something like 3 times more. So you'll get a fantastic return in case if you rationalize the option, rationalize the capital, but go for a very simple trading system also. Go for a very simple trading system also. So all these things are in your hands. So you are now, so you can look at, I've got less time to spend. I want less number of trades. Okay, but the result, even if it is matching with a normal Nifty growth over a period of time, I will get it, but I will put less capital. Instead of putting so much in the cash market for Nifty's return or leverage transaction through a futures, I will put it through a deep in the money option where I will put even lesser capital. So even if the system is only matching the buy and hold of Nifty, it is okay, because the return that I'm going to get in the deep in the money option is going to be many times of a normal cash market or a futures investment there. So I will go for a simple system which matches my execution capability. That's all. So finished. So it doesn't mean that you have to always have any complicated lower time frame or higher time frame system. You can also elect to do something like this. So this is all about the trading systems that we wanted to have a discussion about it in order to highlight or what are the things that you should think about and come out with this. So we are not saying that you should use this indicator system. That is all depends on each one's favorite, and also what works for them, and also what has been back tested for them in different asset classes. Asset classes, because we are talked about in general, whether I'm not talked about only Nifty, I'm talked about whatever that you do. It could be slightly variable for different type of assets. It could be slightly different for crude. It could be for gold. Could be, because each one has its own characteristic in movement. So based on that, you will have to have a system which is back tested and used for that. Whichever that is comfortable for you, you can use that, right? So any questions right now, please ask. Thank you very much. So thanks for your participation. On Thursday, we will see what review our market development and look towards new strategies. Thank you very much. So good night, good day for tomorrow. Thank you very much. Bye.